Clearly, I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month, and reconstructing it. Where are there things I wish I had done differently?
Hello and welcome back to Cryptollennium. What you just witnessed was a clip from today's New York Times Dealbook event where SBF and many other influential people spoke. We'll cover this event briefly and take a look at why the market's been pumping. So without further ado, please like and subscribe and let's dig in. So at this event, CEOs, other influential type people, and SBF were there giving their take on many different topics. One of them was the chief executive officer of BlackRock. So for those of us who are unfamiliar with BlackRock, they are the largest asset manager in the world, managing over $10 trillion in wealth. And their CEO said the firm invested $24 million in FTX. This is wild. So today, BlackRock Chief Executive Officer Larry Fink said that they invested this $24 million. He also said there were some misbehaviors at the crypto exchange, FTX, but that the technology behind crypto is still relevant. This is positive. I'm glad that he understands the silver lining in all of this. So, more interestingly, take a look at what SBF said about FTX US's funds and their situation.
Make a distinction here. You look at the US platform, you look at the international platform. The US platform is a US regulated platform with American users. To my knowledge, that's fully solvent. That's fully funded. And, I believe that withdrawals could be opened up today and everyone could be made whole from that none of these problems plagued the US platform.
So that was just a brief clip of a much more interesting statement that we'll have at the end of the video. So stick around if you're interested in hearing what was all said. It was actually a question related to a story that somebody had sent in about losing $2 million, their complete life savings, and this was only a part of his response. So this is kind of promising, but until he pays up, it's all smoke. So let's see what else happened. Well, Kraken cuts its workforce by 30% in an effort to survive the crypto winter. According to its CEO, it grew too quickly to accommodate the fast-growing crypto ecosystem, and currently it's about 1,100 people, comprising about 30% of its total workforce because of the conditions. And according to the CEO, Jesse Powell, Kraken had triple its workforce due to the fast-growing crypto ecosystem, the bull market. And the current pullback takes the size of the company's team back to where it was 12 months ago. And so this is understandable, but this is just another domino that seems to be unrelated to FTX, because if you take a look at this chart, pause the video, try to review this. Let me know if you see Kraken anywhere, because I was not able to find it. So even being somewhat unrelated to Sam Bankman-Fried's investments, Kraken even seems to be cutting down, Coinbase, other big companies. And so the contagion, who knows if it lies just within one body, because this may not be an isolated event. And even if it's unrelated to Sam Bankman-Fried entirely, that is actually more concerning. So something to keep an eye on, something to consider, that we're not 100% safe. And you don't ever consider that. Imagine the web of each one of these protocols. So each one of these could be connected to 10 different companies. And that's just like, it's like a pyramid scheme, but in a way that you don't want. It's pyramid scheme of doom. In addition, tomorrow, they're going to be hosting Sam Bankman-Fried in a Twitter space where the community gets to ask questions. So this is yet another opportunity to uncover more to the story. Tune in. We will be covering what is said in this Twitter space if you don't get to see it for yourself. So something else to keep in mind. On a more positive note in the market, Bitcoin reclaims $17,000. Stocks soar following Jerome Powell's speech in Washington. So Fed Chair Powell made a statement that was slightly deemed as dovish. And for those of us who don't know what dovish means, it means less risk off, if you will, or I guess less aggressive towards raising rates. And although he didn't say that they were pivoting, some people may consider this a pivot. In my mind, and this is just personal opinion, he made a statement saying that they're going to be slowing down rates. So in a speech today, Hutchins Center fiscal monetary policy, Powell revealed that the central bank would slow its aggressive rate hikes beginning as soon as this December. It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. Powell said at the time, the time for moderation or moderating the pace of rate increases may come as soon as the December meeting. Don't take this as we're going back into a bull run, because I know a lot of people will feed you that. Just because they're slowing rates down doesn't mean they're turning around and cutting rates. That means there is still going to be more pain to come. More companies will be in crunch mode because interest rates will be up and they will be cutting costs, if you will. Yes, the market can foresee some of this and price it in, but not completely. And we don't know yet if inflation is truly under control because we've only had 1 month of extremely promising data so far. We need a few data points before we can be more confident in this. But it's still good news. And to add to that, Bitcoin mining stock report, miners are doing a little bit better. So quick summary, most Bitcoin mining stocks tracked by the block rose alongside Bitcoin, which returned to $17,000 by the market close, roughly a 3.6% increase from yesterday, according to TradingView data. Some miners fell, but as you can see in this chart, most of them are looking green. Lastly, in good news, and this is not the only good news for the day, but it's something that these 3 points are very, very, very important based on how I view the market. Just in, Telegram to launch a crypto exchange following the FTX collapse. It seems like they're jumping on a possible opportunity. Pavel Durov, the founder of Telegram, has revealed that the messaging service intends to launch a decentralized cryptocurrency product in the near future. What this means? Well, according to Durov, FTX let down millions of users, and he made this statement on his personal Telegram channel. Telegram services millions and millions and millions of people, and a lot of them are probably not crypto familiar. So this is extremely bullish news. Yesterday, we talked about Brazil legalizing cryptocurrency usage as payment. They have over 200 million in their population. Just as relativity stands, 200 million, we have about 300 million total people have dabbled in cryptocurrencies as a whole. To add a large chunk to that, and I already know a lot of Brazil is involved, but with a whole country on board and of that population, it's good news. It's been a good news week. It always really kind of is underneath all the bad news. Bitcoin is looking pretty good. We still have a lot to go, so be careful. The weeks, they do look a little bit promising. Momentum has shifted a little bit, and the FOMO is going to start to creep on you. Be careful. Keep an eye on this as major developments continue to unfold. So not a bad day for the market as a whole, but we still have a lot to go. For those of you who stuck around to see the entire clip of Sam answering the question regarding the individual who lost his savings, that's coming up next. Thanks for tuning in. I'll see you guys tomorrow.
One of the letters I got, I want to read to you, Sam, because it's from a gentleman who said that he lost his life savings. And the subject line is, Sam Bankman-Fried stole $2 million from me. It says, Andrew, can you please ask SBF why he decided to steal my life savings and the $10 billion more from customers to give to his hedge fund, Alameda? Can you ask him why his hedge fund was leveraging long all of these S coins? I'm going to keep it polite for the kids. Please ask him if he thinks what happened was fraud. These are the kinds of letters that I've been getting repeatedly over the past several days. What do you tell this man?
Yeah, I mean, I'm deeply sorry about what happened. Here's, the long and short of what happened. And I'll start by saying, just to make a distinction here, you look at the US platform, you look at the international platform. The US platform is a US regulated platform with American users. To my knowledge, that's fully solvent, that's fully funded. And, I believe that withdrawals could be opened up today and everyone could be made whole from that none of these problems plagued the US platform. Then you look at the international platform, for their non-US users. And I mean, as the letter says, Alameda Research did have a long position. And the international platform, it's a margin trading platform, it's a derivatives platform. It's a platform where all the clients were, going on, placing something as collateral and using that to put on a position, whether that's a futures position, a spot position, a borrow. And what the exchange was storing was the collateral from all of those positions. Alameda Research was, one of those that put on positions there. And as I try and reconstruct this, over the last month, I have limited access to data, but my view of it, from what I have been able to see, is roughly that, basically, look, a year ago, Alameda had, I think, something like 10% leverage, had something like 10 times the assets of the position that it had on. Over the course of the last year, there were a number of market crashes that drove the value of those assets down and the leverage up. I think it was, to my knowledge, still under 2x leverage, as of a month ago. You look at what happened this month, and in a few days, all out, PR assault, which led to a total market collapse in a pretty short period of time, no bid side liquidity. I think more than $10 billion wiped off in the matter of days. And realistically speaking, no ability for FTX to be able to liquidate that position and generate everything that was owed from it.
But I think the bigger question is where Alameda got the loan from, yep. Which is to say that there is a view that this is about commingling of funds. Right. And in that letter that I just read you, this gentleman actually copy and pasted the terms of service for FTX into the email. And I just want to read you this. It says, none of the digital assets in your account are the property of or shall or may be loaned to FTX Trading. FTX Trading does not represent or treat digital assets in users' accounts as belonging to FTX Trading. So how is it possible that Alameda had this loan of such a large size?
So there's that piece from the terms of service, but there were a number of other parts of the terms of service and a number of other parts of the platform on top of that. There is the borrow lending facility, where users were lending billions of dollars of assets to each other, collateralized by assets on the exchange. You had obviously futures contracts where there are leveraged positions on. Now, of course, all of this, it's meant to be the case that these are positions where FTX could, if it needed to, margin call those positions and close them down in time such that it would cover all of those, all those shorts, all those liabilities. Obviously, that wasn't the case here, and that's a massive failure of oversight of risk management and of diffusion of responsibility from myself running FTX.
But just make this very straight. Was there commingling of funds? That's what it appears like. It appears like there's been a genuine commingling of the funds that are of FTX customers that were not supposed to be commingled with your separate firm.
I didn't knowingly commingle funds. And again, one piece of this, you have the margin trading. You have customers borrowing from each other. Alameda is one of those. I was frankly surprised by how big Alameda's position was, which points to another failure of oversight on my part, and failure to appoint someone to be chiefly in charge of that. But I wasn't trying to commingle funds.